You've come a long way in this series. You've learned about covered calls, the wheel, protective puts, iron condors, and even cracked the code of the Greeks. You're armed with knowledge and maybe, just maybe, feeling that itch to finally place your first real trade. But right now, I need you to do something that sounds completely crazy. Don't do it. Don't log into your brokerage account. Don't risk a single dollar of your hard-earned money. Because between knowing a strategy and successfully executing it, there is a vast, treacherous gap filled with emotion, psychology, and markets that just don't care about your plans. Jumping in with real money first is how beginners turn textbook knowledge into very real, very painful losses. So what's the bridge across that gap? It's called paper trading. Think of it as a flight simulator for investors. Pilots spend hundreds of hours in a perfect, risk-free replica of a cockpit before ever flying a real plane with passengers. Paper trading is your financial flight simulator. It's the practice of executing trades with virtual, fake money in a real-time market environment. In this video, we're going to build your perfect paper trading plan. We'll cover exactly how to start, which platforms to use, the critical rules you must follow to make it realistic, and the most common and devastating mistakes people make when they just pretend to trade. By the end, you'll have a step-by-step blueprint to practice any option strategy without risk, build unshakable discipline, and prove to yourself that you're truly ready before you ever hit the buy button with real capital. Let's build your simulator. First, let's destroy the biggest myth about paper trading, that it's just for complete novices. That is completely wrong. Paper trading is for every serious trader at every single stage of their journey. It's for testing a brand new strategy. It's for understanding how your emotions react during a sudden 20% market drop. It's for getting familiar with a new brokerage platform's order types without making a costly mistake. The goal here is not to get a high score on your virtual balance. The goal is to make every possible mistake here, in the simulator, where it doesn't cost you a thing. Your mission is to fail, learn from those failures, and develop a process that can withstand the pressure of the real world. So, step 1 is choosing your simulator. You need a platform that offers real-time data, allows for complex options trades like iron condors, and has a realistic trading interface. Thankfully, many major brokers offer superb, free paper trading platforms. Thinkorswim from TD Ameritrade, now part of Charles Schwab, has an incredible feature called Paper Money. Tasty Trade also has a great simulated trading environment. Interactive Brokers offers a demo account. Choose one, open it up, and fund your virtual account with an amount that mirrors what you'd really start with. Now, here is your non-negotiable paper trading protocol. These are the rules of the road. Rule number 1, treat the virtual money like it's real money. This is the hardest part. Your brain knows it's fake, so it will tempt you to take insane risks, to not care about losses, to average down recklessly on a losing trade. You must fight this impulse. Before every single trade, ask yourself, would I do this with my actual life savings? If the answer is no, you don't execute the trade in the simulator either. Period. Rule number 2, track everything. Keep a detailed trading journal. For every virtual trade, you need to record the date, the strategy, the underlying stock, the strike prices, expiration, the premium you paid or received, your exact rationale for entering the trade, and most importantly, your emotional state. Were you nervous? Were you overconfident? Were you just bored and looking for action? Then, you record your exit and the profit or loss. This journal will become your most valuable tool for self-improvement. Rule number 3, simulate realistic conditions. You have to include commissions and fees in your calculations. Most paper trading platforms don't automatically deduct them, so you have to manually subtract them from your virtual balance. This is absolutely crucial because a strategy that seems profitable without fees can easily be a losing strategy once you factor them in. Also, honor the settlement period. If you sell a put and get assigned stock, you can't use the buying power from that sale for 2 virtual days. Just like in the real market, you have to make it as real as possible. Let's build a sample paper trading plan for a beginner. For the first month, focus on mastering single leg options. Start by paper trading simple long calls and long puts on a broad market ETF like SPY. Focus on feeling the effects of delta and theta. See for yourself how quickly you can lose 50% of the option S value if the stock just doesn't move in your favor. Then, Practice covered calls, buy 100 virtual shares of a stock you like, and then sell a call against them. Manage that position all the way through expiration. Experience getting assigned. See how it feels to have your shares called away from you. In month 2, you'll move to defined risk spreads. Paper trade cash secured puts, which is the entry point for the wheel strategy. Then, try a bull put spread or a bear call spread. Finally, attempt an iron condor. Remember, the goal here is not profitability. It's to understand the mechanics, the order entry process, and what the profit and loss chart looks like at expiration. You're learning the how, not just the what. Month 3 is for stress testing. This is the most important phase. Go look back at historical charts. Find a period of extreme volatility, like March of 2020. Start your paper trading account at the beginning of that month and try to trade through it. Try to run your covered call strategy while your virtual stock drops 30%. Try to manage your iron condor when the market gaps down 5% right at the open. I promise you, this will teach you more about real risk than any textbook ever could. Now for some brutal honesty. Here's why most people's paper trading fails. Mistake number 1 is they don't take it seriously, and because of that, they develop terrible habits. They just click buttons without a plan, reinforcing the exact impulsivity that will destroy a real account later on. Mistake number 2 is they confuse luck with skill. If you get lucky and double your virtual account in a month with a series of reckless trades, you haven't learned a thing except how to be reckless. You'll take that false confidence into the real market and get absolutely obliterated. And mistake number 3, they quit as soon as they start losing virtual money. This is a critical error. Losing in the simulator is a gift. You need to experience the feeling of a trade going against you, practice your exit strategy, and execute it without panicking. If you can't handle a virtual loss, you have zero chance of handling a real one. So, when are you truly ready to transition from paper to real money? It's not after a certain amount of time. It's after you can confidently check these boxes. 1. You have a written, tested trading plan from your simulator that details your exact strategy, your position sizing rules, and your risk management. 2. You have consistently followed that plan for at least 50 to 100 paper trades across different market conditions up, down, and sideways. 3. You've experienced significant virtual drawdowns and recovered by sticking to your process, not by gambling to make it back. And 4. You can look at your trading journal and see a clear pattern of disciplined execution, not emotional reactions. When you can do that, you're not just a beginner with knowledge anymore, you're a practitioner with experience. To quickly recap, paper trading is your essential, non-negotiable apprenticeship. It is the bridge between theory and execution. Use it to learn the mechanics, to develop a rock-solid trading plan, and most importantly, to train your emotions. The market will be here tomorrow, and next month, and next year. There is no prize for rushing in unprepared and losing your money fast. The prize goes to the patient, disciplined trader who respects the market enough to train for it. This video concludes our course series on options fundamentals. You now have a toolkit from income generation to insurance, from sideways strategies to the language of the Greeks, and finally, a safe playground to practice it all. Your next step isn't placing a trade, it's opening that simulator. Start your engine, follow your protocol, and log your hours. Prove to yourself that you're ready. Thank you so much for investing this time in your education. I appreciate you being here. If you found this series helpful, please subscribe for more content.